Resource Watch is brought to you in association with Tebe Investment Corporation.
Hello and welcome. Now, miners in Africa are facing major challenges, from falling commodity prices to slowing demand. Today we speak to Exxaro, and they've recently thrown in the towel on a major project as profits continued to fall. I'm Nozipho Mbandra, and this is Resource Watch. Let's kick off with the market wrap for this week.
Challenger Energy says it's still keen on exploring for shale gas in South Africa's Karoo. The firm says it has recently submitted an environmental report in support of its exploration permit application. Earlier this week, oil major Shell said it would slow shale gas exploration, a move widely seen as a result of Shell's frustration with the lack of regulatory progress in South Africa. Australian firm Sunbird's Ibubesi gas project in South Africa will supply Eskom's Unkellig power station with 30 billion cubic feet of gas a year for up to 15 years. This is in line with the utility's plan to use gas to run its generators rather than costly diesel. And South Africa's biggest pension fund has paid just over R1 billion for stakes in 2 solar power stations. The state-owned Public Investment Corporation has taken 20% stakes in Ilanga and Cleaner power stations in the Northern Cape. They're expected to add 200 megawatts of power to the national grid.
Now, South African mining company Xaro saw a 192% drop in profits from 2013 to 2014, and this due to pre-tax impairments of the Mayoko iron ore project in the Republic of the Congo. We spoke to company CEO Sipho Nkosi about the troubled investment and their operating conditions. Before we get into the numbers, let's talk about the environment within which you've had to operate in the last financial year and how that's then fed into what we see on the balance sheet.
You know, if you go back from 2008, when we had the first recession, the industry in reality has never recovered very well. But the prices were pretty okay until 2011, and then they started collapsing in terms of what you're seeing because of the impact of China into the entire global market. And today we're feeling the pain and the pinch just for that today.
We're going to get to the headlines that everybody's talking about, and this is of course around that investment in Congo. But let's maybe start off with the issues that are not swallowed up within that particular investment. Let's look at your local environment in South Africa. How would you describe the kind of challenges you face there and how you've managed to, even in that context, increase revenues?
Well, South Africa is not different to any other mining dispensation around the world. So what you see in Australia, what you see in South Africa, what you see in Russia, what you see in America, it's still the same. The mining sector is having challenges, and that is probably caused by the oversupply situation that is there. And as a result, the prices get depressed. South Africa has her own unique challenges. One, probably things like power supply, shortage of power supply. That's a challenge. And in the last few months, we've had some issues with regards to labor issues. And of course, the skills issues is another South African one. And of course, sometimes the change that is taking place in legislation, and that tends to cause a little bit of uncertainty in the lives of the producers.
The coal business has done relatively well in South Africa. Let's talk about iron ore. We've seen commodity prices tumbling across the board, but you seem to have taken quite a hit on that front.
No, we haven't. I mean, remember, we have a 20% exposure in SIOC, and for many, many years, they have given us good dividends that have helped us to support our business. But because of the downturn in the economy and the lower prices, the dividend they are giving us has shrunk. Coupled, of course, with that is the is the project that we have in the Congo, we're trying to develop in Congo. Of course, that project would by now have developed or been developed if, for instance, probably two key things had happened.
Yeah.
If we had all the authorizations on time. The second one, if the iron ore price didn't dip as much as it has, we probably will be having a project today.
The iron ore price, not so much in your control. In terms of what falls within your ambit, what's the biggest lesson you walk away with from that Congo experience?
Well, what is the biggest lesson is the lesson that all of us as miners learn. And that is, when you get into a project, it's a long-term project. You should build some flexibilities on the project. For instance, if you look at what has happened to our project in Congo, it's not different to any other company that has tried to develop a project in West Africa. They have, as a result, slowed down, impaired their projects, and also things simply because of the cost element. And that's what we've learned. We've learned that if you go to a place, make sure that the infrastructure is in place, make sure that you understand the place pretty well, and do your homework before you do whatever you're doing there.
Let's come back to South Africa a little bit more in terms of just a focus on South Africa. I want us to talk about Eskom briefly. Give us an update in terms of that Medupi expansion project. Where are we? What are you still grappling with?
Well, on the mining side, I think we're now ready to deliver the coal to Eskom, and we've been ready for the last 2 or 3 years to deliver that one. On the power station side, we are quite pleased with the latest developments that we saw there. That unit number 6 is starting to fire, and they are burning some of our coals there. We think that in the next 6 months, the whole unit will start producing power that will be injected into the system. So I think that project is now going to start ramping up probably to 2019 or 2020 when you'll have all the units being in operation.
Remind us again about the kind of contractual agreement that you have in this period where there's been a relative degree of uncertainty. Have you lost money in the process? How has the contract either worked against you or in your favor?
We are always in constant contact with them. As I said, we have met our side of the bargain in terms of developing a mine. And because of that, each contract has got certain hurdles that we've got to meet.
Yes.
And if one party did not meet certain conditions, the other one can go and talk to them and say, you know what, we are exposed as a result. And this is what has happened between ourselves and Eskom. And Eskom have been very good in saying, you know, we understand where you are. Your shareholders paid money to be where you are, and therefore, would it be okay if we covered your fixed costs, so that you don't get the exposure that we think you are facing? And we've welcomed that one, and they've been a great partner to us as a result.
Certainly sounds like the nature of the relationship you've enjoyed has offered you some degree of protection. Let's go into the investment landscape in South Africa generally. You spoke earlier and you compared South Africa with other markets, and you said the challenges are more or less the same. Talk to us about the investment case for South Africa right now. What do we have to offer as a market to investors?
Remember, South Africa, we used to say, it held the yellow jersey in mining for many years. But of course, other countries started emerging. Like Australia became very strong, like Indonesia, like Colombia, all of them started producing quite a lot of product. And therefore the competition became very stiff.
Yeah.
So it depended on the market, where the market is situated. If you look at the current situation, the biggest growth takes place in the East. And who is much more closer to the market?
Yes.
It's Australia, it's Indonesia, and very many countries around there. And therefore they compete with us. The disadvantage that we have is that the price may be the same, but in terms of freight, it's a longer distance coming from this part of the world to, say, China.
Well, that's not going to change.
That's not going to change. And therefore, we as South Africans are now looking at ways of remaining competitive.
Right.
And what are those? It's looking closely at technology to see whether we can bring down our cost, probably have bases closer to the market as well, because it's important that you do that, because it gives you that advantage. But there's lots of focus on technology, and improvement of skills,
Yes.
looking at our skilled people. We are skilling quite a lot of our people as a result, so that we face the future. And that would, we believe, give us some advantage in a lot of ways.
To what extent are we seeing unions taking part in this conversation of what the future of mining in South Africa could potentially look like?
I don't think we have exploited that one as well as we should have been. But we are in conversation with the unions now. We are in conversation with government. We are in conversation with general society, including those that live adjacent to the mines, to say to them, things cannot remain as they are if we want to continue being competitive as South Africa. So we've got to do things differently and make the world want to come to us and want to deal with us.
Has government done enough in terms of what it's bringing to the table in terms of policy stability and the right kind of incentives?
You know, it's a journey. Remember, in the past, before 1994, it seemed like a different country because the laws favored another section of the community or of the society. And post that one, laws had to change to embrace everyone. So government has to change the laws such that it becomes a normal society. We can't remain in the past. And that has caused quite a lot of delays, a lot of misinterpretation sometimes a lot of unhappiness, because all of a sudden we are not sure of what is happening because of the changes. But I believe that in the passage of time, we'll all get used to the new laws and the way things are done, and the country will move forward.
Gold miners and labor unions in South Africa will begin a new round of wage negotiations soon. This comes as the country's platinum miners are still recovering from a crippling 5-month strike last year. In our Gem of the Week, we look at how wage talks differ in the two sectors.
When the world's 3 biggest platinum producers, Lonmin, Amplats and Implats, united in the sector's 2014 wage negotiations, it was uncharacteristic because of the nature of negotiations in the industry.
In the platinum sector, you had different mining houses, the individual companies, negotiating deals with workers.
But in the gold sector, the employers and the workers all wheel and deal in one platform in what is known as collective bargaining.
And I think it makes for a much easier deal at the macro level because they've come a long way, they've done this for many years.
In a few weeks from now, employees will once again sit at the bargaining table with their employers to negotiate a new wage agreement. Some already anticipate it will be a difficult round of talks, with reports saying unions could demand as much as 100% increases for some of the lowest paid workers. So the million-dollar question, could there be a strike?
It's unpredictable, but very unlikely. I say unlikely because I think the parties are much more prepared from those lessons of history not to repeat itself.
Wage talks are due to kick off in the gold sector in May or June. Christine Mundwa, CNBC Africa, Johannesburg.
And that's it for this week's show. Thank you for joining us. Let's keep the conversation alive. Follow me on Twitter @TheRealNozi, and the hashtag for the show is ResourceWatch.